The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the April 28th terrific Tuesday edition of Hour 2 of the Trader's Edge. I'm your host, Steve Rhodes, and I hope that you're off to a great start of your day. Let's make sure that you and I, that we do everything we can to have an extraordinary Tuesday. Of course, the easiest way to do that is to always remember that what's talked about is a dream, what's envisioned is exciting, what's planned becomes possible, what's scheduled is real. And I want to really thank you for scheduling your time with me here this morning. I'm honored by your presence, and I'm here to serve you. So feel free to call on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. Remember, if you've got a question, somebody else has got that exact same question. So how about a random act of kindness? That's really a way to live your life. It's a way to start your day. This is, of course, Terrific Tuesday. None other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading off 69 points, trading at 17,969. The S&P down 9 points at 2,099. The composite off 41 points. She's trading at 5,019. The Russell 2000 off 6, trading at 1246. The DAX is off 277 buckaroonies. Let's go take a look at that. The FTSE's down 109. Gold's up $8. Silver's up 22 cents. Light sweet crude is up 45 cents out there. Leading the charge to the upside is Mercado Libre, up about 370. Randgold Resources up a couple of bucks. Rent-A-Center up $3. United Parcel up 260. To the downside, you've got IDEX Labs off $16. That's down 10%. Whirlpool is off $16. That's down 8%. Biogen BIIB down $10, down $2 out here. Let's start off by taking a look at where are we going to go? Let's go take a look at the ETF structures. Let's go take a look at the Qs out here, the QQQ ETF. There was the possibility if the results, if the market had traded poorly with regard to Apple, and I'm not saying that it's not, but there was a possibility that the Qs could have formed a island top reversal. Did not do that. Right now, all we've got here is the gap is being closed. That gap from the trading session of April 23rd to the 24th. Now, volume out there was 32 million shares. You've already done 10 million shares, so that does not look like that level of support, is going to hold. But we'll see. With regard to its market profiles, it's got support just down below at the 109.25 level. So we'll see what happens as that gap gets closed, and whether that holds as support. If she doesn't hold as support, then you're looking at about the top of this April 17th swing point as the target line, 106.95, 46 million shares down there. So the key level to be watching inside the QQQ ETF is going to be that 109.07. If we go take a look at the IWM, down to 84 cents with 6.2 million shares. What do we know about the IWM? The IWM has, it's got a couple of A to B equals CD patterns, but let's forget about those for the moment. What we know about the IWM is ever since the trading time period of March 24th, so over a month now worth of trading sessions, the IWM has traded in a consolidation, which is really one of its hallmarks out here. Its consolidation pattern being between the 126.28-ish level and the 122.23 area. Now, the most recent swing point inside the IWM is March 26. That's got 26 million shares. The top of that bar is 122.99. Right now, so far, the low intercession has been 123.52. But the volume of 6.3 million shares coming into 26 million shares. So volume moving into it, hasn't hit it yet, but it's moving into that swing point with some volume. That likely says that this little consolidation pattern that's been in place here inside the IWM for more than a month now, that likely is really the pattern that's in play. And that says that we ought to see this 122.23 hold as support. If it doesn't hold as support, whole different meaning out there. But right now we're looking at what are the likely targets inside the market. If we go take a look at the SPYs out here, the SPYs are trading down with about 20 million shares, off about $1. If we take a look at what the SPYs did, the SPYs here traded into the February 25th swing point that had 73 million shares. They did it yesterday with 79 million shares. The SPYs were pushing into that swing point with volume. Typically what happens when you push into a swing point with volume, you're going to be back up there. It doesn't mean you're going to be back up there today, tomorrow, but it does mean that the SPYs will likely be back up there. Now what we've got to do is gauge, hey, where are the SPYs headed to the downside? Well, we can go take a look at our TAS daily market profile support level. That's at 207.62. The most recent swing point out here for the SPYs, that was on April 17th. That had 191 million shares. You've done 19 million shares in the first 45 minutes of trading. Let's just say it's 20 times 6, 120 million shares. Actually, the SPYs are moving down into the April 17th swing point with light volume, and that's based on the first hour of trading, which we know is going to be stacked up from a volume standpoint. Now, the top of that level is 209.23 out here. The SPYs have not gotten down to that area. So far, the intra-session low has been 209.45. Seems to me like there's no reason for it to not be able to get down there and test that area. But unless volume just really ramps up and picks up to the downside, which it can, the SPYs are moving into an area that is held as support and a most recent swing point, and doing it with light volume. Won't know what that volume picture looks like until probably 2:30, 3 o'clock, 4 o'clock for sure out there, but that's what it's doing as we speak right now. If we go take a look at the Dow Diamonds off a $1.15. Down $1.15 with volume of 1.2 million shares. What are the diamonds doing? Maybe the diamonds give us the first piece of information as they get to their market profile, its daily market profile of 178.61. Volume of 1.2 million shares coming into that April 17th swing point that had 8.6 million shares. 1.2 times 6, that's going to get you pretty close to that volume. So, and you're trading into that April 17th area. This says the Dow Diamonds likely go test that low of 177.16. That's what's going on with those ETF structures. Let's go take a look with inside the S&P what might be going on. Let's take a look at the energy sector. That is mean and green, but you've got light sweet crude up 62 cents. Let's go see what the energy sector is doing. The energy sector doing nothing but consolidating at these highs after making the 1 to 1.618 A to B equals CD pattern to the upside. Let's go ahead and take that off the screen out here. Let's remove that. Let's go see what else they're doing out here. As we take a look at the XLE, the energy sector. The energy sector has tested the swing point from February 17th that had 22 million shares, tested it with 20, tested it with 21, 12 million, not enough to bust it up. But at this stage, most certainly it's not busting things down. The XLE looks like it may have pretty decent support at about $80.87 out here. If we go take a look at the technology sector, the XLK being hampered by Apple trading back $2.70 as we speak right now. But let's go see what it is doing. The technology sector has a swing point from March the 2nd. That's got 6.8 million shares out there. Yesterday, into it with 9.2 million shares. So far, the pullback today, 2.5 million shares. 2.5 times, let's just call it 6. You've got, what, 12? You've got about 15 million shares. If volume were to keep up, it's not going to keep up at that pace out there. But that's the straight line of volume analysis so far. So look for the technology sector. If it can close below the low of March the 2nd, that low is 43.10. Then that says price could easily pull back in that 41.91-ish area. But we know about the technology sector. The number one weighting inside of the S&P is it was pushing into a swing point with volume. Of course, we looked at the SPYs. That is exactly what it was doing yesterday as well. Let's take a look at the financial sector, the XLF. Then we'll go take a look at the healthcare sector. The XLF not doing a whole lot. Price right now trading into its swing point that takes you back into the March 26 level. 32 million shares down there. The last times we've seen tests have been with 39, have been with 21 most recently on April 22nd. Today so far, 6.8 million shares. So 6.8 going into 32. It's got the volume. If it closes inside 2407, pretty good chance that you're going to see a test of around the 2378-ish area. 2378. That would be the low of that swing point from March 26th. Let's go take a look at the XLV, the healthcare sector out here. The healthcare sector off 70 cents, trading down at 72.34. What is it doing? Well, the healthcare sector, let's get rid of that descending price channel out here. So that's no longer in place. Let's get rid of that trend. That's no longer in play. She is traveling inside its swing point from April the 1st. The April 1st swing point has volume of 22 million shares. You've done about 5 million shares in 45 minutes of trading. Price is moving back into that area with some volume. That says the low of that swing point gets tested, should get tested. 71.31 to 71.74 is likely the target for the XLV. Let's go take a look at what's going on in the S&P 500 via short-term, the short-term futures contract. Let's go take a look at the 30-minute chart out here. Let me hit my update button. Let me see if price is still moving lower with less relative weakness out here. And the answer to that question is it most certainly is. I didn't expect to see that. I expected to see that it was not moving down with less relative weakness. But the matter of fact is that it is. Now, if I were to take you on a tour through the S&P futures contract on a 30-minute basis, you would see that the pattern that is actually setting up as we speak right now is a pattern that in the past has called intermediate term tops and bottoms out here. That's still in play. You're in the fifth leg of potential 7 legs to the downside inside the ES Mini on its 30-minute chart out here. And price, believe it or not, even after this flurry here, has been pushing lower with less relative weakness. Something to think about. This is Steve Rhodes with TFNN. We'll be right back. Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 89, S&P is down 10, Composites off 39. You can't tell me emotion doesn't factor into the markets out here. Thanks to Mike, who sent me an email, as well as Z inside our Tiger's Den. Hard to say whether this is the catalyst, but sure seems like it. The catalyst to the sell-off here. Iran forces seize a U.S. cargo ship with 34 people on board. That was about probably about 9-10 minutes ago, and by now maybe it was about 11 minutes ago when that actually took place out there. That perhaps is the movement that we've seen inside our markets, moving lower. Of course, doing it with less relative weakness when you take a look at the intensity of the selling. That's what our 30-minute chart was showing. We've seen gold move higher. That's up $7, and we've seen light sweet crude bounce up 57 cents as well. So we know we've taken a look at the We've taken a look at the stock market, the index ETFs. We've taken a look at that 30-minute chart, which has been a really good barometer with regard to what price wants to do in this market that has been consolidating and churning sideways for 4 months now. So those are patterns that we just need to truly be aware of. Let's go take a look at gold, though, and see what gold is doing, trying to do out here as we take a look at the daily contract. Now, as we take a look at gold, give me a moment to do this, get rid of that. Okay. As we take a look at gold, here's what we know when we take a look at the daily chart. In the case of gold has been trading inside this descending price channel out here. That's coming back into the January 22nd level. We can see that the top of that descending price channel was taken out yesterday with conviction. Price was able to get all the way back to its point of control, its TAS point of control level. That's at 1206. That's the largest congestion area. You know, picture yourself driving down the expressway, you know, and coming up to that big curve. You probably know a specific curve. Maybe it's not even the expressway. Maybe it's a specific road that you're going down, and just simply coming into that area and seeing all the traffic that's normally there. We take a look at gold for a period of nearly a month now out here. Price has been really comfortable in that 1206 area. It's as if, as I've been saying here, with the exception of Friday, yesterday just simply got things back on track. Something is holding the price of gold so that the closes are basically within a $10 range. Friday was an exception, but what did price do yesterday? It boinked. Boinked is a very technical term out there. You have to be experienced in using the terminology boink, but that's exactly what it did. It boinked all the way back up to that comfortable spot of that point of control, 1206. What did it do this morning here as price went ahead, and whether it was the response to the high frequency trading systems out there, it moved right up into resistance. PS de resistance at 1215.20 level. The actual high that we have seen out here is 1214.90. That's pretty close to me. And here's the deal. Technically, I would say to you that gold broke out yesterday, and that today, we saw a little bit of a pullback into that channel line, and we saw price reject that. And I'll buy that when I see price move above this swing point from April 6th, when we get above the 12.60 level and we see it with conviction. Otherwise, I'm going with nothing more than boinking that is going on out here with regard to price moving up and down and moving right into that 1206 point of control level out there. And so it's just somebody, something, some group of traders out here has got their thumb on the price of gold with regard to the closes, and they're not going to go ahead and let it off until they're darn well ready, until they've got things positioned. I wish I could tell you that it was the commercial traders, because I can't, because the commercial traders have kind of taken a neutral-ish type position out here. So I can't even go to their data and give you any kind of a clear message. Instead, we're going to go with this clear message here of this little consolidation range, this trading range that gold is trading into. So at this stage here, I say you just got to be careful. You got to be careful until gold takes out that high from April the 6th. That's at least how Stevie is calling it. That is what I see when I take a look at that gold chart. If we take a look at the silver chart, 13 cents. Now, silver, on the other hand, as we take a look at the daily chart, man, that's been a beautiful thing. That was a nice move off of the lows out here, those lows being a test of the swing point from March the 11th. That's a heck of a wide-ranging bar. And as you know, prices don't end on wide-ranging bars out here. That truly broke the downtrend out here. But in the case of silver, we haven't really seen something's thumb being held on price, containing it within, such a small range out here. Now, in the case of silver, what is it likely to do out here? It's getting some follow through today. And I can make the case silver ought to get back to certainly that April 6th area, 1693, maybe 1731. Steve Rhodes with TFNN. We'll be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 75 right now. S&P is down 7. Composites off 25. Okay, so let's go take a look at. I had a request here to go take a look at the GDX for S&P inside our Tiger's Den. So let's go take a look at that. Now, in the case of the GDX, we won't really know till the end of the day whether this is really trying to break above resistance. This resistance, now, the GDX, if we take a look at it, let me do this here. Let me just clean up the chart here for a moment. That just means get rid of some of the lines, makes it a little bit easier for you to take a look at. Whoops. There we go. So as we take a look at the GDX, in fact, let me get rid of these moving averages for the moment, too. Make that easy. Okay, now we've got the GDX, and what I want you to pay attention to, I think the important area for us to watch is this supply line. 106 million shares to the downside on March 6th. That was the gap down. Now, that creates an open window out there. It creates a gap. Gaps are your friends. Gaps can act as support. Gaps can act as resistance. In this case here, that 1994 levels acted as resistance. Now, when price is able to close that window, which it did just slightly for 2 trading sessions, April 15th and April 21st out there. It's a good positive sign, but it didn't really test that area, didn't really close that window with, didn't really close that gap, so to speak, with any kind of conviction. So I still say that is a line of resistance. Now today, if in fact the GDX were to close here at 2037, in fact, I'd like to see it actually close above the high of March the 5th, and that's at 2038, so it's 1 penny above where we're trading right now. Then I would say, okay, that group of sellers, that supply line is basically gone. Those folks who want to just simply get their money back because they thought that the GDX was a good investment or what have you, they're just simply glad to get their money back. Then what we're looking at is we're seeing a nice little rising price channel form inside of the GDX, or it's at least what it appears. Let's go see if we can go ahead and put this in here. It's not the, and I'd have to say that is more likely the channel line out here, and then that would say to us with regard to where's the GDX likely to run into its next area of resistance, I'm going to say it's going to be at the top of that channel line, which also correlates to getting back to the February 27th swing point. So if the GDX can close somewhere like, first, if it can close above 2038 today or 2036, then what you've got is a move probably up into the 2111 area. If it closes back below 1994, which it has done for so many times when it tests this area, I got to tell you, it just is a factor that just says, hey, I tell you, what it tells us is it's just not ready. And does it mean that it moves lower? Well, let's put our TAS profiles back up on the screen. And it says that, well, by moving lower, maybe it moves down into 1932 or so out there. And if it breaks 1932, then it's 1851. So the GDX, I think why don't we just do this? Let's take a look at a couple of the holdings inside the GDX just to get a feel. Let's look at Gold Corp. I think that's one of the top 5 holdings inside the GDX. You can see that in order for the GDX to really move higher, Goldcorp's got its own issue with that same deal, with that same level, March the 6th. Heck, Goldcorp has definitely not closed that window. It has not repaired that window. By repairing that window, I mean getting rid of it as a line of resistance out here. So, if you take a look at Goldcorp is, I know it's one of the top 5. It might be one of the top 2 or 3 holdings inside of the GDX out here. I could be wrong on all accounts out there, so don't trust me. That's just going from historical information, going back through my Rolodex and my brain out there, and sometimes it's not such a good thing. So go check it out yourself. You can find out what the top 10 holdings are inside of the GDX out there. But Goldcorp certainly not not showing us not achieving any kind of breakout level. Rand Gold, we take a look at Rand Gold. It's up about $3 out here. Rand Gold, is breaking through a level of resistance. It had its gap down from on March the 4th, but it needs to close above that 76.14 level today. If it rejects 76.14, it too is not ready to break out, and that's really the only, because I can't tell you that the message is if it can't break through there that it's breaking down. That's not the message at all. It's just it's not ready to break out and have a party, and that's what's really going on inside of Rand Gold. Now, let's take a look at, so we looked at gold. We took a look at silver. Let's go look at light sweet crude. I haven't looked at light sweet crude here for a while. So let's take a look at it. It's up 46 cents, trading out at $47. What we've shown here inside light sweet crude is that we've seen this is the June contract. We have seen a nice little rising price channel that has formed. This morning, when light sweet crude was pulling back, hey, whether the ship was being boarded, whether the Iranians were boarding a U.S. cargo ship or not, price was pulling back right into the bottom of this little rising price channel, which is held as a support level. Now it looks like 58.82 may be the target area for light sweet crude. It's trading at 57.42, so another $1.40 to the upside, which would be a resistance level out here, and that's in light sweet crude. Let's look at the currencies. Get the U.S. dollar index. Of course, I have a 15-minute delay on this. It's up, it's down 650 ticks, so perhaps more than that. If we take a look at the Great British Pound out here, let's go see what the pound is doing this morning. The pound here, boy, really, had that nice little, here's a key reversal session. We talked about key reversal sessions inside of the first hour and the requirements there. There's a nice big old key reversal session on March the 18th. That level acted as support and, couldn't bust that one down through that swing point. Now it's trying to bust it up and get into the swing point here from another key reversal session, which was from February 26th. That says the high of $1.55 to about $1.53 is where the Great British Pound is headed. That's going to put a little bit of weakness inside the U.S. dollar index, inside the euro versus the U.S. dollar. It's just trading in a sideways consolidation. It's going to try to take on the highs out here of 1.1052. If price can get above that, that'll be pretty impressive. That'll say the price could actually rise up into the $1.15 level. That would put weakness inside of the U.S. dollar index. If we take a look at the euro-Japanese yen currency pair, that's moving higher nicely. If you're wondering why the market, after going through its little conniption there, after the selling, you got these high-frequency trading systems that are just scanning Bloomberg, how many news media sources are there really that it has to scan? 8, 10 worldwide, something like that. So they're scanning, they're looking for words, they're looking for what? Emotional words out there, because they know that trading is emotional. My goodness, they've spent who knows ungodly amounts of money to take advantage of the emotional aspect of trading. Folks, that's what you and I are going to do next Thursday in my psychology. We call it the psychology of trading. The reality is it's the psychology of life, because the psychology of trading, the decision-making process that we go through for that is no different than any other process, no different than any other process that impacts your health, your wealth, your relationships out there. So come on over to the homepage of TFNN.com. This is something that you want to master. We don't spend enough time on it, certainly during the radio shows. And so it's the first course that I know of that we're going to really focus some time. It's a 2-day workshop. It's 45 minutes each day. It's May 7th. It's May 14th out there. Don't worry if you can't attend live. It's between 6:30 and 7:15 in the evening. You got access to the archive. You're going to have access to me individually to assist you however it is that I can to help you take whatever it is. Look, if you're doing well, it's about being to help yourself do even better. And if you're struggling with things, then it's just really be able to pick you up off the to pick your bootstraps up and be able to take it to to get out of to get around the obstacles. And there are obstacles that each of us face. Each of us in life are always facing obstacles. I'm going to show you the quickest, the shortest, the easiest way to be able to get up and over those obstacles out there. So come on over to the homepage of TFNN.com. And while you're over there, don't forget Basil's got a free workshop. It's a free workshop for subscribers. He's got a workshop that begins this evening. It's a workshop that you should definitely. There is the information that is available here at TFNN. It's extraordinary out there. And you really should take advantage of it. You should absolutely take advantage of the extraordinary information that is available here at TFNN. You get a lot of stuff for free out here. Look, the largest cost in life, I'll ask you this. What's more important, money or time? Or how about this one? Which one can you get back in a heartbeat? Yeah, you know the answer to that one. You cannot get back time at all. You can get back money in a heartbeat, and you got to be able to have the psychological edge in order to be able to do that. In any event, as I mentioned, as we came into the show, we saw that flurry of selling, and we went through the ETF structures rather quickly out here. Of course, we just simply went back to the patterns that have worked so well in the past during this sideways action move inside the market for the last 4 months, and it's this pattern here. It's one of the Rhodes momentum trading indicators. You want to talk about a trading indicator system that does nothing more than feels out the emotion of the market? I can't tell you why it works. I just know, actually, I could tell you why it works. I just know that it works out there. And I know when these patterns are prevalent, if you're wondering, is there some sign that the market gives to you and I with regard to what it wants to do? My goodness. Absolutely out here. And so when it comes to emotions, when it comes to trade, and when it comes to everything else, we got to keep our emotions in check out here. We got to know what drives us. We got to be able to clear the slate, come back and take a look at it. In any event, I have no idea what's going to happen next at 10:45. I just know there's a pattern in play that's out here that has worked so well that you've got to hit yourself upside the head with a 2x4 if you don't pay attention to it out here. In any event, let's take a look at Apple. Let's go see what Apple is doing out here. Apple out with big numbers. What a war chest. How much money is it that they actually have in the bank out here? It's huge. Now, I guess the buybacks that they're talking about doing, a total of, and I haven't figured out, between dividends, between other buybacks, what they're really doing. But I don't know. I've heard the figures of like 180 billion or so tossed around. How much money does Apple have in the bank, just in cash? 197 billion or something like that. It's some maybe it's way more than that. I don't know. Some fairly decent figure out here. Here's what we know about Apple, and this is where it's going to be. In my opinion, it's a little bit of a tough call here because you're getting a couple of different divergent messages, and when you get two different divergent messages, it almost gets you to a neutral position. One message with regard to Apple is that it's pushing into a swing point with volume. Now, in the case of Apple, it's the all-time swing point high, right? 133.60. Now, when you're looking for a failure, you like to see price push into a swing point with what? Lighter volume. Not heavy volume. The volume up there is 69 million shares. That's February 24th. Apple is pushing. It pushed above that high, so we cannot say that it's pushing lower. It's pushing higher. Apple's been pushing higher with volume today, and that volume so far, 56 million shares. When you push higher with volume, it says you at least get back up there and you at least test that level of 133.60 or 131 as we speak right now. If it closes above 133.60, key reversal session or not. You close above 133.60 today, you've got a confirmed A to B equals CD to the upside. What kind of confirmed A to B equals CD? The kind that takes you beyond $150, but I would say 150.60 becomes your next move out there. So on the 7-to-1 split, 150 would do what? That would get us to about 1,035 or so. You got to check my math. I could be way off on that number out there, but that's in essence what Apple would be saying. Now, the same time frame at the same. I don't know. At the same. What am I looking for? Somebody give me the moment. At the same point in time, meaning right this very moment, I can also make the case that Apple's given you a key reversal session today. That's when you move higher and lower, above and below yesterday's candle session. You're in a stretch condition. That RSI 14, pretty close to the 70 level. That qualifies as a stretch condition out here. And then what that says is that you just have to see a close in the minus direction today. Just 1 point below the actual open. That would give you your key reversal. Now, here's the cool thing, both for bulls and bears out here in the case of Apple. And that is that if let's say price stays below 133.60, let's say it is a key reversal session, there's nothing more bullish than a failed bearish pattern out here, and that's what you'd have to say would be the case with regard to Apple if it ever got above today's high. That high out here being the high of 134.54. Now on my phone, the U.S. Navy denies confirmation with Iranian military amid reports cargo vessel seized. Well, that didn't say that the boat wasn't seized. That just says that there's no military conflict. Much like the police standing down yesterday in Baltimore out there. But I'm not going to go there. I'm not going to go there as much as I would like to go there. In any event, so that's what's going on in Apple. It's pushing into a swing point with volume, says that price is eventually back there, but you've got conflicting messages out here inside of the market. We don't have a conflicting message when we took a look at that 30-minute chart for the ES Mini. There's no confliction there. That was saying price is moving lower with less relative weakness, that this market has something both for bulls and bears out here. And that may be the way that it is for the rest of the year. And if that's the case, man, then there is no better place to tune in to at TFNN, then there's no better place to tune into, because we give you both sides of that action out here. You talk about action. IDEX Labs out here down 16 bucks. That's down 10%. Let's go see what this thing is trading into. That looks pretty bad. Let me see if we can pull this back. On the other hand, it's actually just pulling back into an area where it broke out. IDEX Labs, maybe IDXX is a ticker symbol. Maybe that's headed to the 130.06 level. Maybe it's done its work at 140.42. Steve Rhodes with TFNN. I'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 32. S&P is down 3 points. So when rounding out the day, let's take a look at a couple indicators here to assist us with what the market is doing. Now, we take a look at the summation index for all three of the indices that we follow: New York Stock Exchange, left-hand side, composite center, Dow on the right-hand side. If the markets were to close here right now, the sellers are absolutely in control of the market. We'd have all price oscillators down below the zero line, and that would be the message of the markets. We won't really know until the end of the day if that is the case. New York Stock Exchange, there was enough action yesterday to push that price oscillator down below zero, but it's really kind of hanging in there as we speak right now this morning. So I need some additional proof inside the New York Stock Exchange that the top and the short-term, intermediate-term top that I was looking for to take place next week has actually come in early out here. Inside the composite, really the same story. Inside the NASDAQ composite, we know yesterday the IBB was putting a lot of selling pressure inside of the NASDAQ composite, but the bottom line is you get that price oscillator down below zero. It tells you that the buyers have lost control. Inside the Dow, this would be the first day down below that level out here. But if the market were to close here, at these levels, it would tell me that the sellers are the ones that are in control. How long they're going to be in control, I don't know, but it would tell us that they're in control. With regard to price damage, it's interesting. If we take a look at that VIX index and we take a look at that 50-day exponential moving average line, that's the top portion of my screen. That is the yellow line. We saw price move up to that level and get rejected. And that's key. 1437. If today you were to see a close above 1437, not 1438, a decent close above 1437 out there, then we'd see a lot of carnage inside the markets. And then we'd see carnage that could last for a while inside of the markets. But what we know right now is a level that has acted as a resistance. It has acted as a resistance. Wow, how about that? This thing is really, for the most part, you'd have to say, with the exception of one trading session, this line has acted as resistance since March 12th. 2015. So it's been about 6 weeks out there that area is held as a resistance. And in a 6 week period of time, it's why we've seen the market kind of go sideways to higher, because that's exactly what takes place when the VIX index is trading below the 50-day exponential moving average. And the reality, folks, is, and I know people like to talk about other things, the reality is it happens all the time. And so don't be confused with a high VIX means that the market is going to sell off. The number inside the VIX is nothing more than a math calculation. And you can come back to 2009, and I'll come back to 2009 to March 11, 2009. March 11, 2009, so it didn't catch the exact bottom. We saw the VIX index, which, by the way, was trading out. Well, let me tell you what that number was. So just so that we're accurate here, we got to be accurate. March 11th, the VIX index closed at 43.61. 43.61. And guess what? Market just simply continued moving higher. Now, when it was continuing to move higher, what was the VIX index doing as it relates to its 50-day exponential moving average? It was trading below it. Folks, a high VIX just means it's a high VIX. It doesn't mean diddly other than it's a high VIX out there. When price is above that 50-day exponential moving average, that's when there's real carnage that can be done in the market. That's the real meaning of that great tool, that great indicator. That's why Stevie calls it the liquidity gauge out there. Don't be fooled. Stay tuned, folks. We got our man Basil Chapman. He's going to be up next after Basil. We've got the option hour because it is Terrific Tuesday. Then we got Daryl Martin, David White, the Tom O'Brien Show from 3 to 5. Have a great Tuesday, folks. Look forward to seeing you tomorrow.
Basil Chapman has just announced 2 live workshops that he'll be hosting April 28th and May 5th that only subscribers to his opening call will gain access to. On April 28th, Basil will host a 45-minute live online workshop, The Essentials of the Chapman Wave, where he'll teach the basics of the Chapman Wave notation that Basil created and uses daily in his trading and newsletter recommendations. On May 5th, Basil will host a second 45-minute workshop where this time he'll revisit the 1929 market comparison webinar and provide his attendees with an updated take on the socio-economic trends Basil has spotted currently taking place. If you're an opening call subscriber already, then your seat is already reserved. If not, then sign up for a 30-day free trial to the opening call today. You get a month of Basil's daily newsletter, The Opening Call, along with 2 live workshops coming up. Don't miss out on this offer. Sign up for Basil Chapman's Opening Call newsletter today on the front page of TFNN.com.
This is TFNN.